winding down now, but there's still some really interesting names that have yet to report here in June. And some of these are the big time retailers that we've been hearing about. How good is it? We're going to find out. But some are also some pretty prominent tech names. So let's dive right in and see what are the 5 top names you should be watching this week. So the first one out the gate is going to be Zoom Video. And as you can see, they have a great earnings surprise track record. They haven't missed since their IPO in 2019. But everybody thinks with the reopening that Zoom Video is, over. That phenomenon is done now. These shares have come down quite a bit off those all-time highs there. Over the last 3 months, they're down almost 12%. But is this the worst of it? Is the sell-off done, or can you still get these shares cheaper? This is going to be an important one to watch because it was a pandemic play, but now it may or may not be a recovery play. Then we're going to switch it over to Stoneco. STNE is the ticker, and this is the Brazilian digital payments company that is in the Berkshire Hathaway portfolio. And I've talked about it in the past, and this one too has come down because it's one of those growth names. It's coming off those all-time highs. It has a not so great track record, only the one beat there in the last 4 quarters, but people are going to be looking at other things like what's happening with the pandemic reopen down in Brazil. Now, this one is not cheap. It's trading still, even with this pullback in the shares, at 74 times. Earnings growth expected to be tremendous both this year and next year, 56% this year and 61% next year. So the fundamentals are good. It's just a matter of what you're willing to pay for these shares. Now, they have fallen 24% in the last 3 months. So obviously the street is saying, I'm not willing to pay that much for these shares. But we'll see off this earnings report if this is the bottom or if these shares still have a further to pull back. Then we're going to switch it over onto the retail side and apparel. PVH Corp is one of the biggest apparel companies in the world. It's Tommy Hilfiger and Calvin Klein. You can see that they have managed to put together a decent earnings surprise track record here, even during the pandemic. Their only misses in the last 5 years have been here during the pandemic, with these 2 misses in the last year. And these shares have really recovered. This is the flip side of some of these other stocks that we've just looked at, in that this one is considered to be a pandemic recovery play. As the global economy reopens, everyone can get out. We want to buy new clothes. And based on what everyone else is saying, including the big department stores, we are buying new clothes. So it's just a matter of what they're seeing globally. Again, they're big in China. They have a big European business as well as then the North American business. So this is a key one to watch. Shares up 22% year to date, but still attractively priced at 18 times. So if you're into apparel, watch PVH. Then we're going to switch it over to the semis. They're still reporting, rolling out here, and we're looking at Broadcom, ticker AVGO. It's got a great earnings surprise track record, no misses here in the last 5 years. Shares have stalled out here, though, as everybody's kind of taking a wait and see with these supply issues on the semiconductor side and what's happening in the reopen. So shares are actually decently priced here with this kind of timeout. And they're trading only at 17 times with a PEG ratio of 0.8. So things are looking kind of value-ish with Broadcom here right now, but we will see what they say this quarter and if these shares can get a bump higher and break out again. Then we're going to switch it over to cybersecurity, which is an important area right now with a lot of these hacks that are going on and attacks. So Crowdstrike is going to be one of the big ones to watch. CRWD is that ticker. It's got a great earnings surprise track record like Zoom with no misses since its 2019 IPO. Shares have pulled back on this growth stock weakness a bit, but still up year to date, almost 5%, and looking to see if maybe they can break out again on another strong report. But valuation is a concern with Crowdstrike. It has a forward PE of 731 and a PEG of 29. So no value to be found here. And it's just a matter of how much are you willing to pay for these earnings? And we're about to find out. So some interesting companies still to report, as I said, and these are some hot charts. So you don't want to miss a single episode of the Earnings All-Stars, because I'm going to be bringing you the final hot charts in this earnings season before we wrap it up. So be sure to subscribe to get all of our videos at zacks.com/YouTube, and I'll see you again next time with the hottest earnings charts.